Before we talk about infinite banking, I want you to imagine something for just a second. Imagine that there's someone that provides for their family. They wake up early, they go to work and make sure the mortgage is paid, they make sure the lights are on, they make sure the kids have the opportunities they didn't have. They are the financial engine of the household. And then one day, the engine stops. No warning, no preparation, just one phone call that changes everything. Now the family isn't just grieving, they're also asking questions they never wanted to ask. How will the mortgage get paid? How will the kids go to college? How long will the savings last? Because when income disappears, the bills don't disappear.
Now let's imagine that same family a few weeks later. So a letter arrives in the mail. Inside is a check, a big check. That's called the death benefit. And suddenly the conversation changes, right? The family is still grieving. However, financially, their world doesn't instantly collapse. The mortgage is paid, the lights stay on, college is secured, and the family now has time to heal, right? Because now that's possible and it's realistic. And that's what happens when you receive a death benefit check. This isn't marketing, this isn't about a financial trick, because the most valuable financial asset in anyone's household family is the person who produces the income. And at Wealth Nation, we simply say that you are the greatest asset, and life insurance protects the greatest asset.
The number one asset.
So now, here is where the conversation of infinite banking gets a little interesting. Because today, many people discover infinite banking and they say something surprising like, Carmen and Darius, I just want the cash value. I don't care about the death benefit. And we say, really?
I don't think you quite understand how this thing works.
And when we hear that, we know something immediately, that there's a gap in understanding.
Because the big picture is the cash value doesn't exist without the death benefit. So when people first discover infinite banking, they hear things like borrow from your policy, use your cash value, become your own bank. So naturally the mind goes to the goal is cash value. Then why do I need the death benefit? It seems logical. It makes sense, but you have to watch the whole video. And so the analogies like this, we said this in a previous video where you can't have rental income without owning a property. And like with life insurance, the death benefit, the cash value doesn't exist without the death benefit. The death benefit is the property.
And as we think about where this has all evolved to, I mean, whole life insurance policies have been around for over 100 years. And there's an individual who we talk about in some of our videos, which is R. Nelson Nash. He created the book, Becoming Your Own Banker. And his ideas were simple. He was talking about using whole life insurance as a private pool of capital, right? Instead of going to the bank and accessing funds for a loan, why don't you use your whole life insurance policy instead? But the point is to use it responsibly because you already have control of your income and now you're using this private pool of funds to leverage and create more cash flow. And the system simply works once the insurance contract is in line first.
Right. So let's look at this from different perspectives.
Oh, I got the consumer. That's you. I got the consumer. So the consumer perspective, right? Let's start with this is when you buy a policy, you think I'm putting money into the policy. Okay. From the insurance perspective, insurance company's perspective, they're saying that you are purchasing insurance protection. You see the difference? Because the insurance protection is going to cover the death benefit protection, right? If you die, they got to pay some money. It's also going to protect that company's reserves. It's also going to protect long-term guarantees. And cash value builds alongside of all of that, right? Cash value isn't the product, it's a feature of the contract.
Right. And it's very similar to what we're trying to do within our own household is we want to do all those things. And the cash value for the insurance company is like the cash flow that we want to build within our own household.
Yeah.
Now let's step into the insurance company's world. Companies like MassMutual and One America, they've been around for over 100 years and they manage hundreds of billions of dollars in reserves. And their job is simple. Make sure they can pay the death benefit. So when they design a policy, they're balancing three things. It's protection, risk, and long-term solvency. That's why the death benefit matters so much, because death benefit represents the insurance risk the company is guaranteeing. They guarantee the death benefit. So without enough death benefit, the company can't structure the contract the same way.
And here's where too much cash value can be a problem, right? Because if you've heard us speak in previous videos, we've mentioned something called a MEC, an MEC, or a modified endowment contract. And what that means is when a policy becomes a MEC, because we put in too much premium relative to the death benefit, that means it can trigger that the IRS can classify this as called a modified endowment contract. And now that means that your policy and the cash and the growth and everything is now taxable forever.
Yeah, so that means whenever you get a withdrawal or a loan, if you're younger than 59 and a half, it's taxed.
And we're simplifying this, but the point is it becomes a modified endowment contract. So the life insurance companies have to design policies that avoid triggering that MEC unless a client intentionally wants that structure, right? Because there's some reasons why someone might want it. But the point is, that's why the death benefit plays a critical role, right, Darius?
You're right.
Because what I was going to say is because where does the cash value come from?
The death benefit.
Did you hear that? Where does the cash value come from, Darius?
The death benefit.
So
The higher the death benefit, the more cash value you can have access to, or you can create in that policy.
what be darn? Huh. Did I say it right? Did I have a nice twang?
Now, keep doing the video.
Darius is from South Carolina, so I'm always trying
So
to tease his little
I say here's the structure. Here's the structure. We're going to continue doing the video. The death benefit does three things. It creates the legal insurance contract. It allows the policy to receive tax advantages. And three, it supports the growth of the cash value. And without death benefit, none of these things exist. So when someone says, I don't care about the death benefit,
that you telling us you don't care about the cash value.
yeah.
But I want to go back. I think it's important that we address the fact that if you significantly reduce the death benefit and you don't prioritize that, that's going to affect how we can design policies and give you the maximum amount of cash value. So we have to do a lot of work on our end, when if we just cared about the death benefit in the first place, we wouldn't have to do so much reworking to make sure that the policies don't MEC and all of these things to give you the cash value and the death benefit.
Right. So back to the point, if someone says, I don't care about the death benefit, that means they don't understand how the system actually works.
Yeah, how the policies actually work.
Sure.
So when we think about this mindset shift, instead of you all asking us, Carmen and Darius, how can my policy grow faster? The question that you should be asking is, how can I build the strongest financial contract possible? You see the difference there? Because once everything is strong, everything is going to follow. The cash value is going to grow. Obviously, you'll be able to have access to policy loans. Why? Because you have the capital. We can talk about legacy planning, because we're not going to legacy plan off of $100,000. Let's be real, right? Which is the death benefit that you said you wanted because you want more cash value. So the point of this is giving you an example of, like, say you have a guest that stayed at your house, right? But let's like bring this home in the sense of real tangible things. You have a guest that stays at your house. You give them a nice place to sleep. You give them a warm shower. You give them access to your kitchen.
You didn't actually give them a shower. You just provided a place for them to take a shower.
And then they tell you, I don't care about any of this. I just want the kitchen. Like, man, you ain't gonna shower?
You're not going to sleep?
But the point is right, you can't have the kitchen without the house. It's the same way as we think about life insurance. You're not going to have the cash value without the death benefit.
Yeah.
Okay? Even try going to a rental car company and say, hey, I just want to rent the car, but I don't want the responsibility or the insurance if anything were to happen. Guess what that rental company is going to say? Not here. Because guess what? Risk has to be covered first, and then the benefit is provided. Go figure. That's the same thing with life insurance.
Right. You know what I was thinking when you said, what's the insurance company? I mean, what's the car company going to say? You better go ask your auntie. Everybody got an eye.
You better go ask your auntie.
You think I could borrow your car? All right. Anyways, I digress. At Wealth Nation, we teach something simple, and that is you are the number one asset. And the life insurance policy protects the asset. The cash value supports the asset, and the death benefit finishes the mission. And when you understand that, infinite banking stops looking like a trick and starts looking like what it really is. And it's a long-term financial system.
So when you ask us to create a whole life insurance policy for you, please, please, please do not tell us you don't care about the death benefit. So if you want Wealth Nation to design your next whole life insurance policy, please click on the link below so we can serve you.
And if you want to know how much premium you need for your next policy, check out this video.
Remember to own your own lifestyle.
Or someone else will.